Sam Jennings' business has blossomed despite the banks, not because of them. Her florist stall in a busy London station was in a prime location to grab commuters on their way home, except many of them wanted to pay by card, and she couldn't accept card payments.
Getting a card machine so that I could take electronic payments was out of the question, because often it was 3 to 5 days that they would keep your money from the mainstream banks, and they charge so much per month to use the machine, and then you have to pay per transaction, and it just all adds up, and you can't commit to anything like that if you don't know. You can have a guess at what your turnover is going to be, but forecasting is guesswork, and you don't know what the reality is, so you can't sign into contracts that can then cost you your business if you can't pay the banks that could close you down.
The problem, everyone agrees, is a lack of competition. This is what the big 5 UK high street banks looked like before the unprecedented earthquake of the financial crisis. The impact of this devastating once-in-a-century event was to cause 2 of them to merge. Because the banks were then pumped full of government-borrowed quantitative easing, they didn't need to compete for customers' business.
2.5 years. Yeah.
Tom Blomfield is the CEO of the UK's newest bank. Monzo got its full banking licence just last week. It's part of a new wave of technology-based institutions designed to provide more choice and better service.
For example, things like unauthorised overdraft fees. These pretty egregious that for bouncing out a direct debit or a cheque, some banks charge £15 or £16. I mean, Google does this bouncing out spam emails for free. So bouncing a direct debit is actually less complex than detecting spam email. You just reject the payment. I don't understand why it should cost you £15. Or you go abroad and use your card. My bank charges me 7 or 8% fee to make a foreign exchange transaction. Again, that's sort of a result of a lack of competition, I think.
The government is trying to encourage this competition. The Treasury hosted this FinTech conference in London today, all about inspiring innovation and investment.
The regulators, particularly in this country, the governments, have forced through regulation, forced through challenger bank licences, the big banks to wake up and to shake up the way they do things. And so challenger banks are showing in certain segments that you can do lending better, you can do credit better, you can do person-to-person payments better. And then if the big banks don't follow suit, then they will start to lose customers.
My iPad is my till, and I literally just put in...
For Sam, the answer came not from a bank, but from a tech entrepreneur. The card reader she now uses is made by Square, long established in the US, but launched in the UK just 2 weeks ago.
And you will get, when will you see that £10?
4 o'clock tomorrow.
So every...
On the nose, yeah. Working day.
The CEO of Square is also the CEO and co-founder of Twitter.
After social media, why is financial technology next on your list?
It wasn't about going out, what's the next big problem, but it was a very small problem for our co-founder, Jim McKelvey, where he was not able to accept a credit card and he lost a sale because of it. And we saw that in others. We saw that in other sellers we talked to, that they were missing out on sales because they weren't able to accept the payment device that the buyer wanted to use. So we learned really quickly about how to accept credit cards, how to make hardware, the industry, what mattered most to sellers, and it turned out it was access to funds and speed. And we built it, and it really resonated.
But there's another huge change coming next January, a new EU directive called PSD2. It will force banks to give customers access to their data. It should mean that new apps and new ideas can flourish.
You might want to share it with a price comparison website. So rather than having to type in all the details of your car insurance to get the best deal, you simply give them access to your transaction history and they can look through the last year and say, oh, you could save money on your broadband and your gas and electricity, and here are some other providers that might give you a better deal. So it really puts the power into the hands of consumers.
PSD2 fundamentally, I believe, will be probably the biggest change in financial services, certainly in Europe, for a generation. If you think back to music, to streaming music, 20 years ago, the idea that you wouldn't buy vinyl or buy a CD, you'd actually just click and download a track on the move, inconceivable. I would say PSD2 is going to do for banking what Apple has done for streaming music.
Apple Pay is an amazing new way to make convenient...
But Apple and the other big tech firms are already getting involved in financial technology, and it may be that ultimately they are the big winners in this market.
I think we've seen Facebook launch bill splitting and sending money just yesterday. So now in Facebook Messenger you can send money and you can request money from people, in the US at least. And so yeah, it's certainly a concern for us and the big banks, that Google or Facebook or Apple or Amazon, one of the big four basically, they come in and eat everyone's lunch. But I don't know, I think it's a huge, huge market, and there's room for a number of winners here, I think.
It is perhaps too much to expect that people will ever send bouquets to their bank managers, but the revolution in financial technology should mean that people feel they have more of a choice and more of a sense of control.